Hello traders, this is Blake Morrow with ForexAnalytix and you're listening to the week ahead video for August 25th, 2019. I am filming a little bit earlier than normal. That's because tomorrow I will not be able to film this video at my normal time, so I'm getting it out to you guys a little early. So just keep that in mind when you're watching this video. When you're dealing with G7 meetings over the weekend, there could be some commentary that could change between now and Sunday afternoon or Monday morning, depending on where you're at when the market's open. So just keep that in mind. Now, before I go into the charts and what I'm actually looking for next week, I just want to mention if you haven't tried out ForexAnalytix, do so. Just do it. It's $1 for 10 days. Just click right here where it says sign up today, right there. Click there, sign up, download the mobile application from the App Store or the Google Play Store. So this way you have all of our analysis, all of our push notifications, all of our charts, all of everything right to your mobile app and your mobile device, no matter where you're at. So if you're not in front of your computer, you can get our analysis, because I know I trade a 24-hour market, and believe it or not, I actually live try to live a semi-normal life. You know, the 8 hours I'm not in front of the computer. So having push notification, especially once certain levels are breached or certain analysis is pushed out, it's so important to me as a trader. You guys are going to love it too, especially for those of you that are on the go, and it is important in my view. So try us out. It's only $1. All right, now let's talk about, let me move the data flash app out of the way. Let me get that out of the way. That's all of your real-time news as it's released. This app is literally about as fast, if not as fast, as my Bloomberg system. So that's kind of cool when you get those news releases, and it's audio. It's audible as well, so you can hear it. Now, because the analysis or this video is being filmed early, all the analysis is not finished for the weekend. Our team provides analysis over the weekend, and you'll see some of them haven't been updated for a couple of days. Some of them were just updated, and you can see some of the charts are just being updated and freshened up over the weekend. That's important because I'm actually going to be drawing on a lot of these charts. But let's talk about the price action that we saw on Friday. Pretty massive moves. I'm happy to say, myself and the ForexAnalytix community. And by the way, if you want to figure out how to get to the ForexAnalytix chat room, see that little icon right there? You just click on it in the upper right hand corner. Takes you over to the whoops, I have it opened over here, so that's why I can't open it in two different spots. So, but that's what the chat room actually looks like when you're logged in. And here you can see the chat room here. And there's so many of us throughout the course of the day. They're here talking about charts and what we're doing. And you can see, like, this is the Euro Mexican peso and my thoughts on it, last Friday. But what I'm trying to say, going back a little bit, is I'm happy to report that I and the ForexAnalytix community, we're pretty well prepared for dollar weakness going into Friday. And Friday was a really big day for me from a profit standpoint. And I know it was for a lot of traders as well. We had a big move in the euro. We had a big move in the dollar in general, and that was awesome. I think it was awesome for a lot of people. Now, the problem with what happened on Friday is that it's setting up for some pretty big moves for next week. And if you are short the dollar, that's where the problem lies, is because or excuse me, if you're long the dollar, that's where the problem lies, because you look at the euro dollar, and that's a big outside day candle and a huge rally off of the, well, it is an 88% retracement. You can't see it here, but I'll show it to you right here. 88% retracement. Let me go ahead and adjust that. Oops, that's not what I want to do. Here we go. You can see, well, actually, you know what? Let me go backwards. You can see the 88% retracement right there. And Also, regarding the euro dollar, it created a higher low. So if you're short euros, long dollars, you have to keep that in mind. A lot of the movements that we saw based on Friday's price action was because the intensification of the trade war. Now, my assumption is over this weekend and over the G7 meetings, and you got the White House is probably a little worried about what had happened in the S&P. And let me just take you over to the S&P on Friday and that big steep sell-off. You might see a little bit of trying to calm the nerves of the market going into next week. Remember, it is the last week of August. We are in the last week of summer, quote unquote, and I would assume that the markets are going to try to calm down a little bit going into the end of summer. But you can see we're breaking some pretty key levels of support, and also coming back down to that 200-day moving average. Obviously, when you're talking about the S&P, as we approach 2800, it's going to be pretty key support. You can see it right here, 2800. That's where the 200-day moving average is. Now, like I said, the intensification of the trade war can really be seen in, like, you look at the US dollar Mexican peso. You've heard me talk a lot about the US dollar Mexican peso and the weakness of the emerging market currencies. That chart was not updated, so let me take you over to the US dollar Mexican peso here. I've discussed a lot about the US dollar Mexican peso rallying, and as it intensifies, you would see more emerging market currency weakness. You can really see it in the Mexican peso, where institutions, asset managers are going to sell those higher yielding currencies, repatriate them into different currencies like the US dollar, or less yielding currencies like the US dollar, and specifically the euro. Look at the rally that we saw in the euro Mexican peso on Friday. This is a scary look if you're long risk. I did tweet this on Friday. If you follow me at PipZar on Twitter, then you saw me tweet that out when the euro Mexican peso was a bit lower. I think that squeeze at the end of the day was a little exaggerated there. That was just some really intense short covering just as the market closed. I doubt we're going to open up at those levels going to Friday. I'd hope so, because I'm actually long the euro Mexican peso, but that's a different story. But the fact that we closed above this 22 euro level, it's 22 euros versus the peso. That's a pretty bullish look for the euro Mexican peso, and frankly, it looks like we're going to take a stab at this 38% retracement and possibly make a run for 2318 would be the 618 retracement of this entire move lower that you've seen. The highs from 2018 to the lows in this year. The risk is that we're starting to build for some pretty aggressive moves to the upside. And if the S&P continues to break lower, that's going to further spur a short squeeze in the euro Mexican peso, and also the dollar Mexican peso. And I'm going to take you over to another chart that I do a little bit more work on. Let me take you over to, I believe it's this chart. Yeah, you can see this very long-term pennant formation starting from 2014 in the dollar Mexican peso. That's a scary look, frankly. And like I said, if risk appetite continues to wane and we see stocks come under pressure, which my assumption is, and this is an assumption, obviously anything can happen. I would assume, and you've heard me say this even on the week ahead videos, maybe going back 3 or 4 weeks ago. My assumption is Donald Trump's play going into the election cycle is, for lack of better terms, he made this mess, but he's going to run on the idea of, in order for us to get out of this mess, you're going to have to elect me again. You're going to have to elect me, because in order for us to get out of this mess that he created with the trade war, you're going to have to elect me and not a weak Democrat, right? I mean, that would be my assumption. So if that is the case, if that is the case and that's his political move, then that means the trade war is probably going to continue to intensify going into this next year, which means that emerging market currencies are going to continue to stay weak, and you're going to see a rally against, the peso, the rand. You can see the rand has also, like, weakened substantially. The U.S. dollar, ZAR is strengthening. You're going to see currencies like the rand, the lira, the peso, and the commodity currencies too, like the Aussie dollar, continue to stay weak. All right, and the Kiwi as well. So those are just some thoughts that I have just off the top of my head, and that doesn't mean that may be the case. I mean, the other alternative for the Trump administration would be, hey, look, we found a solution and everything is better between the U.S. and China going into this next year, and then you're going to see a reversal of this. I would my inclination is going to be the first option for the Trump administration. I mean, if it was me, that's how I would play it, but I'm not a politician, nor have any intention of ever being one. So, but I'm just thinking out loud here. But if things continue to get worse, you should see this intense sell-off in these emerging market currencies. Now, let's talk a little bit about the euro. You guys have heard me for the last several weeks. I think it was 2 weeks ago. I did an event with Boris Schlossberg of BK Asset Management with Pepperstone Securities, and I talked about the euro being a funding currency, and that if risk aversion picks up, you're going to see euro strength, dollar weakness, and that's what we're seeing right now. And if you actually listen to that, if you listen to that presentation a couple of weeks back, I had argued that the dollar index is not a safe haven, not at this point. The dollar index will eventually be a safe haven currency, but we're going to have to see a very strong move lower in the S&P. What do I mean by that? That means that we're going to have to break long-term trendline supports before the market gets really worried about, the seam coming unglued, if you will. The market really coming under a lot of pressure will be when or if the S&P breaks long-term trends. And in this case, if you look at the S&P and you look at the last 10 years of the S&P, we're going to have to come down and break through 2,500 before the market gets really worried and says, look, I don't care what I'm in, just put me back into dollars, put me into the reserve currency, the safest currency I can have. That at that point in time, I believe the dollar will emerge as the safe haven, currency of choice. But that's a long distance. I mean, if you think about that, where the S&P is currently to where that would be, that's a 14% move lower than where we're at right now. So where would that put, where would that put the euro dollar? I mean, that could theoretically put the euro dollar back at, I don't know, 114, 115, 118, before the dollar really starts to strengthen again, if things continue to worsen. My assumption is, again, that if the trade war continues to rage on going into the fall, that stocks are going to continue to be pressured. And this is how the Trump administration is going to run on this next election cycle. Is hey, let it worsen a little bit, and we can run on the idea that you have to reelect me in order for us to get out of this. So that's some big picture ideas, but that's just stuff that I wanted to discuss on this week ahead video since all of our charts were not updated. Now let's reverse a little bit and let's talk about this next week. So this next week we're wrapping up the G7 meetings over the weekend. So again, there could be commentary that could completely upend all the charts that I'm showing you, and I just want you to keep that in mind. But next week we do have some data. Like on Monday we have durable goods in the U.S. We have consumer confidence on Tuesday. Wednesday we have Australian capex data. Now that's actually Thursday morning in Australia, but it's going to be Wednesday evening for those of us in the United States. We have U.S. preliminary GDP Thursday morning. That could be a market mover. And then we have Canadian GDP Friday morning. Now, one of the other charts, the last charts that I wanted to bring to your attention, just going into the weekend, is we've been kind of leaning on the U.S. dollar, Japanese yen last week. If you got the analysis, these charts haven't been updated over the weekend. This is from Friday. On Friday, if you were following ForexAnalytix, you'll see the U.S. dollar, Japanese yen looks vulnerable, and a move below the 106.20 level could open up some downside. Here's your 4-hour chart. That's what it looked like, right? Right. Friday afternoon, it did intensify, and it intensified dramatically. We not only broke 106.20, we dropped about 100 pips after that. Now, the reason why this is important is because the yen pairs look vulnerable. I've been sitting here. Here, let's go back to the dollar yen. You can now see the chart. This is the before on ForexAnalytix. Here's the aftermath, right? Going into Friday afternoon. I think a lot of traders have been trying to buy the yen pairs because I get the argument. Risk appetite has held up. I mean, you saw the S&P. I mean, we were closing in on 3,000 on the S&P. The yen pairs have been beaten down, but if you look at them now, I mean, the euro yen's breaking up. This you can probably draw this more like that. I mean, we got a bearish wedge breakdown. I mean, pound yen, we have there's a pennant formation. I'm just kind of off the cuff drawing this stuff for you. Pennant formation. Aussie yen, breakdown out of a triangle. New Zealand yen, breakdown out of a triangle. Canadian yen, breakdown out of a triangle, and actually we're testing 2000. I think it's 2019 lows. Oh no, we're not quite there yet. But you can see the risk is building to the downside. So when you see these yen pairs, like I said, they were holding up relatively well after some steep sell-offs over the course of the last few weeks, but they are breaking down again. And if stocks continue to break lower, these yen pairs are going to continue to weaken, and you have to keep that in mind on how it may affect other dollar pairs. Because if you have the euro yen, for example, you have the euro yen breaking down, and you have the dollar yen breaking down, and then the euro dollar may have a tougher time putting together a rally if the euro yen is breaking down. But it also would have to be how intense this dollar yen sell-off could be. I mean, you look at the dollar yen, we are below long-term supports, and a move below 104.50 could be extremely bearish for the dollar yen. And everything that I've pointed out for you guys today and everything that you see here really is signaling that we are seeing a pickup of risk aversion with the emerging market currencies weakening, with the yen strengthening, These are, and with commodity currencies being weak, this is all, signs that risk aversion, or the desire to sell stocks and move into safe havens, is increasing. Now, the question mark is it going to continue this next week? I personally think things will calm down, as this is the last week of August, but the flip side to that argument is it is the last week of August. There are a lot of head traders on vacation. There are a lot of, you know, second chair traders, third chair traders holding down the forts, and liquidity is going to be really poor. So if risk aversion picks up in the next week, it could get a little bit more volatile, and it could get intense. That's the flip side argument to that. So I just want you guys to think about that going into next week. Now, if you all have found this video beneficial to you, you think it helps your understanding with the FX market and what we're doing here as traders, give us a thumbs up on the YouTube video. If you're watching us on YouTube, give us a thumbs up. Subscribe to our channel so you don't miss any of our videos as they come out. Because we put together these free videos for you guys, the traders at home, and we want to make sure that you're all appreciating and enjoying them. And so we hope that you do. And guys and gals, I will be fresh and available for you Monday morning on the Face webinar with Dale Pinkert. So I look forward to seeing you then. My name is Blake Morrow with ForexAnalytix. Make sure you try us out and download the mobile app. I'll see you guys next week, or actually I'll see you on Monday for those of you that listen in. You guys have a great one.